Okay, good evening, everyone. My name is Kintea Beeler. I'm coming to you about parenting and tax incentives that are beneficial to parents. So there's two critical items that I think are very important that you understand when you're talking about refunds and when you're talking about minimizing your tax liability. And most of the time we see these signs around town that talk about how much you can get for each child, or we talk about how we can reduce our tax liability. So there's the two primary items are tax deductions and tax credits. Okay? The first thing is, how many of us have heard of a tax deduction before? And we've heard of tax credits, correct? Is there any, does anybody know the difference between the two? Anybody? Okay. So on here it says that the tax deduction reduces your taxable income. And what that means is we are assessed taxes based on the income that is earned, and based on that specific number, you're going to get a tax due to the government. And either your job takes money out based on that tax bracket, and you will either get a refund or you will owe. Okay? So by the time we finish this conversation, you'll kind of understand how that calculation is done. The second one talks about tax credits, and tax credits are an adjustment to the taxable income. So they are calculated after the taxable income. Now also with credits, because we hear of them all the time, there are some that are refundable and there are some that are non-refundable. Does anyone know the difference between those? Refundable means that you could actually reduce how much you owe the government and get a refund back. And it's all a credit. So has anybody ever heard of a credit that individuals get more back than what they put in? Any type of credit?
Can you define what? Like I'm slow. You said, what is a credit? Is it given to you by the government? Is that what it is?
Correct.
Okay.
Tax deductions and tax credits are given to you by the government. And then there's two types of credits. There is a refundable and there's a non-refundable. So refundable means that it can exceed how much you owe, make it negative, and then give you back a refund. So a lot of the times you hear about the Earned Income Credit, EIC, and it can reduce how much someone owes and then give them back more money than they put in. All right? Whereas non-refundable means that it can just zero out how much you owe the government. It won't give you a refund, but it'll zero out how much you owe the government. So when you hear individuals say tax deductions, tax credits based on me having children or someone had a child, there are three different categories. There are actual deductions, there are actual tax credits that are refundable and non-refundable. And it's critical that you understand that, because when you start having children and they reach certain ages, as we'll learn here, the deductions or the credits will be impacted by your total home income, the number of children, the age of your children, and what strategy you have. Is there any questions about that before we go any further?